All right, guys. Well, we are excited to kick off day 3 with our first speaker of the day, our first expert. My buddy Chris Naugle is absolutely an amazing investor. What you guys may not realize is Chris has dedicated his life to being America's #1 money mentor. His success includes managing over $30 million in assets in the financial services and advisory industry, and tens of millions of dollars in real estate as well out here. So we are honored to have our buddy Chris Naugle joining us on here this morning from Flip Out of Kennedy, the Money Store. Hey, buddy, what's going on, man?
Not much, man. I'm pumped to be here. I love doing this stuff, especially Sundays, because, you know, like the people that show up on a Sunday, there's one thing I know, like they're willing to put in their effort, their energy, their time. Like they are people that are action takers, and I call them my 5%ers. So I get excited to do these things on Sundays.
Yeah, you know what? I feel the exact same way. You're actually getting hair standing up because I agree the same thing. The people that are here on Sunday are the one of the most dedicated, the most interested, and are going to make the most impact, not only for their businesses, but also the community and their lives as well, too. So,
and that's what we need now. We need leaders right now, because there's a lot of scared people, and it's going to get worse.
Oh, we could go have a whole nother event about that. You know what I mean, man? Well, hey, I know you've got a PowerPoint. You want to pull that up there?
Yeah. Let me just do that real quick.
I'll jump off the video here and let you take over. Take control.
Cool. See, optimize. Boom. All right. Can you see that?
Yep. There we go. Perfect.
All right. Perfect.
Good. Take it away, Chris.
All right. Well, welcome, folks. Like I said, I'm honored that you guys are all here joining us on a Sunday of all days. It really lets me know that I'm speaking to the right group, because there's a lot of people that I can talk to, but I don't want to talk to everybody. I want to talk to those that are looking to change things, not just for their lives, but for everybody else's, because in the midst of what's going on, and I'm going to tell you a little bit more about myself in just 1 second, because at this point, some of you probably don't even know who I am, but I can tell you this. This COVID, whatever you're calling it, pandemic, recession, some people got the D word going around. People like my buddy Ray Dalio. I don't know if you guys know him, but he might just be somebody you want to listen to. But you're either going to see this situation as an obstacle or an opportunity. There's no two ways around it. It's going to be one of the two for you, and you got to draw a line in the sand. You got to figure out, where do you sit or stand in this? Because that's it. You're either going to bury your head in the sand and you're going to get run over, or you're going to stand up, you're going to take the punches, and you are going to be the light in the darkness, not just for you, but for so many people. And that's what we're going to talk about. I'm going to talk to you about a lot of things. I mean, I do this for tens of thousands of people across the country. I got grounded, and now this is how I get the message out to teach people how money really works. And that's what we're going to do today. I'm going to show you how to find money for your deals, for your notes. I'm going to show you where lots and lots of money is. And here's the good news. Money just went on sale. But I'm not the only one speaking today about money. So I'm going to really focus on privatized banking, on how you can be the bank, and also a couple other little things on how to be a magnet for money. Instead of going out there and asking for money, I'm going to just show you how to have money attract to you. This time, right now, it seems bad, but this is the easiest time you will probably ever get to raise money. And we're going to cover those topics. But before we do that, let's just dive right in. What I want to do is I want to show you guys a little bit about who I am, so you have a better understanding. So I'm going to just play a quick video for you.
Chris Naugle is a nationally recognized entrepreneur from Western New York. In his 16 years of high-level experience in the financial services and advisory industry, he has managed over $30 million in assets, specializing in alternative investments, retirement strategies, and wealth accumulation. Using his expert knowledge in finance, he has successfully bought, renovated, and flipped hundreds of properties. Through his passion and success at real estate, Chris and his wife Larissa's renovation designs have been featured on HGTV's House Hunters, My Lottery Dream Home, and their very own show, Risky Builders. But where it all began was a 16-year-old with a t-shirt company in his mom's basement. A dream of becoming a professional snowboarder, owning a skateboard shop at age 17, and a lot of imagination. Here he is. Welcome to the stage, Chris Naugle.
All right, so today we are going to talk about this. We're going to talk about lots of money. We're going to talk about your wealth. We're going to talk about where money is for your deals. We're going to talk about how you can live like the wealthy using their exact techniques. I'm going to show you a lot of things, but I'm really going to show you where the money is, how to attract that money in a very unique way that you already know how to do. You're just probably not applying it. And then I'm also going to show you a little bit more about what I call the money multiplier. Okay. It's how to map out the millionaire mystery. I've got a little gift for all of you as well. So the gift I have for all of you, it comes in the form of here. Actually, you know what I'm going to do? I'm going to stop the share real quick because I want you to see this, and then we'll jump right back into it. I've got 2 books for you. I literally wrote the book on private money. So you're going to get a copy of this book for free. You just pay the shipping. I'll give you the link, but you got to stay till the end, folks. If you're not here till the end, you don't get the goods. Second one is my newest book. You know, when I wrote this book with Brent Kessler, I had no idea what this book was going to do, but this book literally is blowing up. I don't, you know, a lot of people say it's a bestseller. I haven't had time to sit back and look at where it's at, but I know we're shipping thousands of copies of it out, and you're going to get this one for free too, Mapping Out the Millionaire Mystery. Now, let me just read you this because I want to get you excited about something. This is what this book is. What if you could get all the money back for every purchase you've ever made and create wealth through the debts and expenses that you already have? If you're like most Americans, you've spent your entire adult life paying the banks, your creditors, and your expenses. And at the same time, you've watched your retirement funds and your legacy drastically fluctuate or evaporate in the markets. This just happened. You've been taught to give up control of your finances and assume risk, and it's costing you your financial freedom. The wealthiest people know differently. And that's what we're going to do. We're going to expand on this 200-year-old strategy that the wealthy use to eliminate debt, grow their wealth, minimize their taxes, and leave a legacy. And I'm going to show you this, and I'm going to show you how to do this in a very simple way. I might not be able to get through all of it in the time, so I want to kind of dance around and make sure you guys get what you want, but I'm certainly going to show you how this system will work for real estate. Okay, I'm going to show you exactly how I've used this, how I've used this to buy real estate, how I've used this to be the bank, how I've used this to be a private lender, and I'm going to show you how all this works so that you can get back control of your money. You might think, oh, Chris, I'm in control of my money. Well, you know what? Most of the people that I meet, almost all the people I meet, they think they're in control of their money, but they're really not. So I'm going to show you that. And today, everything's going to change. Today, you're going to become the bank. So let me get back to my screen here. All right, there's my contact information. So if any of you guys are looking, there it is. I'm very transparent. It's my email. That is actually my cell phone. And I get myself in trouble all the time with this when I give this number out, but you know, there it is. So write it down, 320-0119. Us New Yorkers up here in Western New York, we never seem to give the zip code. We just assume everybody's from here, but it's 716-320-0119. All right, let's dive in. So you guys, I already said, are the 5%ers, okay? And because of that, this is you. Now 5, and this is the Social Security Administration, 5 out of 100 people are the only ones that are going to be financially secure at the age of retirement. And you guys are all the 5%ers because you're here on a Sunday. The other 95%, they're not here. You are willing to give up your time. Some of you gave up money. Some of you are giving up your effort, your energy to be here to learn something new. That means you're the statistic. You're the positive side of the statistic. But the sad thing about this is it's not that. The sad thing is this is the United States of America, the land of opportunity, the greatest country on earth. How the heck can this be the statistic? How can only 5 out of 100 people be financially secure at the age of retirement? And I bet you any money after this COVID situation, because I know some things. I'm going to get into my story, but I know some things that will tell you that this number might just drop. Okay. That means a lot of 65, 75, and 85-year-olds are going to be working into the retirement, not because they want to, but because they have to. And that's not going to be you. That's not going to be you. So let me dive in and just kind of give you a quick background. I know the video does a good job, but it goes really quick. And I like telling the story because the story is really where it begins. So if you understand how I got where I'm at, because I come from nothing, then you too, no matter where you're at in the game, some of you might be killing it. Some of you might just be starting. Some of you are asking a lot of questions. I'm going to tell you my story so you see that anybody can basically climb and do what they want and follow their dreams. And my beginnings are simple. I started in a lower middle-class family. My dad was an alcoholic. My mom had to raise me by herself, and it was a massive financial struggle for her. Now, I know that's not the norm, but that was my norm. And even though that's how I grew up, I always wanted more. And because I wanted more, mom was always telling me, Don't give up on your dreams. Now, how many of you have ever wanted more? And you guys can comment in. I'm looking at the questions in the comments. I'd love for you guys to participate throughout this whole thing. So I wanted more, just like you. And I was willing to do whatever it took. I was willing to hustle. I was willing to give up things. I was willing to do whatever it took to make that happen. And, you know, that sounds great. But if you are willing to give up everything, the question is do you have the right knowledge to get where you want? Because there's a lot of knowledge out there that is not the right knowledge. And when it comes to money, we're going to talk about how that's not the right knowledge that you're getting. So by 2004, I accomplished 2 major goals in my life. Just like the screen shows, I became a professional snowboarder. That was one of my biggest dreams. And coming from Buffalo, it's not the mecca for snowboarding. So it required me to travel to the East Coast, to Vermont, and do what everybody was unwilling to do. But I managed that. I also managed, by the age of 17, to basically be one of the co-founders and start my own chain of snowboard shops called Fat Man Board Shops, PHAT. And those stores are still open today. I sold them in 10, but those are major goals for a young man. But even though those were goals, that's all they were. And I still wanted more, even though that was where I was at. And what I wanted is I wanted more when it came to money. I wanted to understand money. You guys ever see the movie Wall Street, the original Michael Douglas? Like that movie, when I watched it, I'm like, dude, I want that. Now I didn't want the greed part, right? But I wanted like that power, that money, because I never saw anything like that. I never had that growing up. I was always on the bottom end. If I wanted something, man, it was go out and like shovel driveways, mow lawns. But like that movie changed it. So I dove in and I started studying. I started reading. I started doing anything that it took, and I became a financial advisor. I got all the certifications, all the licenses, and I rose to the top. I literally became one of the top financial advisors in the firms I was at. And moving up to 2008, I was crushing it. I was literally like one of the top 3 in the firm. I was making a ton of money. I had flipped 2 houses. They were not like glorious, like, oh my God, I made a bunch of money, but I had done it. I did it the hard way, but I did it. And by 2008, my next big dream came to me. You see, my lease ended, and I got so sick of this landlord raising my rent every time the lease came up that I said, you know what, I'm going to develop my own strip mall. 2 buildings down was a dilapidated building. You know, the one that when you see, you would just drive by it and be like, man, they should tear that thing down. Well, that building that should have been torn down, to me, that was my dream. And I bought that building using hard money. So any of you that don't know what hard money is, it's a group of private lenders that come together, except for the private lender and the hard money lender that I borrowed from wasn't exactly the kind of person you should ever take money from. I call them knuckles. We're not going to get into that, but you already know what's coming, right? I told you this is 2008. I dove in, I borrowed $370,000 from this guy, Knuckles, and everything was going good. And then this little thing happened, this tiny little thing called the Great Recession. Yeah, that hit me. And it hit me like a Mack truck, bringing me right to my knees. And I literally got to the point where I was 1 payment away from going completely bankrupt. Now, how many of you in your lives have ever made a decision in your life that you thought was going to go one way, and then all of a sudden it goes the complete opposite way? Come on, be honest. Have you guys ever done that? I've done it too many times to count, and this was yet another one of those. And I'll never forget, I came home one night late after working at the plaza. You know, my days were long back then in 08. I'd go to the firm, I'd work in the morning, taking calls of people screaming at me. Then I'd go to my stores and I'd work. And then after my store shift, which store ended at 9, I would go over to the plaza and I would work there until 1 or 2. And I came home that night to this girl right in the middle, who was my girlfriend. Now, she had just moved into my house. She was kind of like, you know, I landed a good one. I'm like, whoa. Got a good one, guys. And I came home and I said to her, because I didn't have anywhere else to go, I said, Larissa, I need your help. I need your help paying the mortgage. I need your help paying the utilities. And sweetie, you're not going to like this, but I got to rent that bedroom out down the end of the hall to my friend Pete. And I might have to rent the bedroom upstairs because I can't make it. Now, can you imagine your girlfriend just moves in, right? She thinks you're this successful guy owning these stores, being a professional snowboarder, being a big shot advisor. And now all of a sudden you're asking her to help you pay the mortgages. You know how defeating that was? It was, but it was the only thing I could do. I had no one else. And you know what? I knew it was a 50-50 shot. She could have walked out the door, or I would find out whether she was the right one. Well, I think she kind of liked me because she did help me, and we ended up getting married, and we just had our first daughter, who is now turning 3 weeks old on Monday. So that's that part. But she did help me. And in 2009 to 14, I was floundering, okay, trying to figure out what direction to go. But I knew one thing. What Warren Buffett said was buy low, sell high, and don't lose money. Well, I understood the buy low part. So what I started doing is I automatically started buying real estate. Now, I didn't know enough about it, but I got a hold of a realtor friend, and we started buying apartment buildings pennies on the dollar. And you remember that, right? Those properties were cheap. And I got up to 36 units by 14. And then I went for my 37th unit. I was kind of doing a good job. I thought I was. And the bank says, Mr. Naugle, we can't give you this mortgage because you don't fit in the little box. The debt to income ratio is out of the range that we can lend. So we can't do that. And I'm like, darn it. I was on a roll, but all right, well, I won't buy the 37th unit. Then the bank says, yes, but Mr. Naugle, because you don't fit the little square box, we have to freeze your lines of credit. Now, this is very relevant because what is happening right now in this COVID, economic collapse, you need to be aware. You've heard President Trump talk about, this special law. And just so you guys know, that's called martial law. And you also see banks changing the rules on their lending. A lot of banks are reducing it. A lot of banks are requiring more down. You're seeing it. It's already happening. Well, this is what happened back then. You see, the bank froze my lines of credit. I couldn't finish my properties. I was forced to sell all 36 units, but that wasn't the worst part. Those are just investments. The dream house that she was my fiance then, bought, we also had to sell that. And I literally got so down at this point in my life that I had some bad thoughts, right? I was like, what? I'm a failure. You know what I'm talking about. This is the second time I had success. I came from nothing, had success, lost it all. Then I built it back up, lost it all again. Like what goes through your head? Well, I'll tell you what goes through your head. You're either thinking bad things, and what those bad things led me to do is take a month-long trip with a backpack to Thailand to learn who I was. But what ended up happening after that is profound. When I got back from that trip, I remember me and Larissa got back together because we had a little breakup after that house had to get sold. And I got a postcard in the mail. You guys have all gotten these postcards. They usually come in Facebook ads now, but it said, come to this 3-day workshop to learn how to flip houses. Now I know what you're thinking. You're thinking, dude, don't you ever learn? But what you don't know is I wasn't going to learn how to flip houses. You see, I had lost everything for the second time now. I wasn't going to learn. I was going to get the free iPod Shuffle they were giving away. So that's what got me there. And by the time I got there, I was bored. But by day 2, 2 people came on and talked about money, Greg and Mike. And when I heard these two talk, and I knew they were a real deal. One had a TV show on A&E, and the other one was his bank, literally like his private lender. And when they started talking, I'm like, oh my God. I have been doing the complete opposite of exactly what these guys are telling us to do when it comes to money. And then I started questioning myself and saying, if this is what they're doing, who else is doing this? Are all professional real estate investors doing this? And you know what? I dove in and I realized that the conventional financial knowledge that I was taught, even being an advisor at this high level, that wasn't what these guys were doing. So the only way I could do it is swipe credit cards, learn from them, mentor with them, follow them around, and do anything it took. And that's what got me off the financial hamster wheel. You see, I learned some things from them, some really, really deep secrets about how money really works. And it changed everything. It changed everything. Today, and I'm just going to get on with this. Today, my life is totally different. We operate about 8 different LLCs. We have the Money School, Flip Out. We have, I'm authored 2 books. We had a show on HGTV called Risky Builders. We've flipped over 250 houses. We have a large rental portfolio, blah, blah, blah. All I'm saying is that I failed enough times where I finally figured it out. But now that I figured it out, now I share it because I don't want everybody else to go through what I did. And if I can just tell you what I did, what I learned, you don't have to go through the financial roller coaster that I did. And that's what I'm going to dive into. I'm going to talk to you a little bit about one of those secrets. But let's first, if I can get my cursor back up on here. I got 2 screens, so this darn thing doesn't like to advance. All right, so there's a couple books that I'm sure you guys have read, or at least you know the authors. How about Robert Kiyosaki? Many of you probably got into real estate because of his book, Rich Dad, Poor Dad. I'm literally listening to that book again for like the 5th time. Now, why would I listen to it for the 5th time? Because every time you listen to a book, every time you read a book, maybe it's mine, maybe it's Robert's, you pick up new stuff. There's always one golden nugget that you miss the first time, the second time, the third, fourth, you get the drift. And that's why I read these books. But this book right here by Robert Kiyosaki talks about one of the secrets I'm going to talk about. How about this big guy, Tony Robbins, Money Master the Game? Page 5 or section 5.5 in this book, he talks about what we're going to talk about. And Mr. R. Nelson Nash, in this book that he did, Becoming Your Own Banker, talks about one of the things we're going to talk about today. Now, in order for you to understand what I'm going to talk about, the first thing you need to understand is I'm going to talk about some money stuff that is completely out of the box thinking. Now, you've been taught money works your whole life. And now what I'm going to do is I'm going to completely shatter some of those things that you think you know about how money works. So let me play another video. I've got time to do this. So that's the only reason I'm playing this. But this video is pivotal in helping you understand the mind shift you're going to have to go through in order to do what I'm going to teach you to do. So here we go. Nope, that's not where we go. Again, I'm using a very weird mouse. Here we go. Most important things you just learned. Okay, takeaway number 1, MacGyver mullets are coming back. We can't get our hair cut. All you got to do is just feather it out a little. I don't know if you can see me. So I'm working on mine, but that's takeaway number 1. But takeaway number 2 is it's just mindset. We've learned how to ride a bike. You all learned how to ride a bike. It started with training wheels. Then our parents take the training wheels off. We crash, but we get back on the bike, even though it hurt. Even though we failed the first couple of times, we get back on the bike and eventually we learn how to ride it. That's the conventional way of thinking about how we do things, right? But then if you tried to learn that backward bicycle, you couldn't do it. Think about the parallel between that and money. Your whole life, you've been taught money works a specific way. You've been taught to physically give up control of your best dollars today and let somebody else be in control of your money. And I'm going to prove that to you. You have literally been taught to give up control of your money. And in doing that, other people have been in control, making money on your money. And the whole time, you've also been taught to believe in some things that just aren't true. And I'm going to dive into that a little bit. I'm not going to cover the whole thing, but at the end, I'm going to give you all a video that I've created. Okay, no sales, just knowledge. That's what I do. I just teach. And I want you to watch the video. If what you're going to see is interesting, because it will change your life. But the hardest part is you got to think differently. And you think that's easy. But what I'm going to show you is going to sound too good to be true. And when you hear something's too good to be true, what do you think? Well, it must be, right? That's exactly what you think. But before I get into the mysteries of money, let me segue, because I want to give you guys massive value. I can teach you about this one concept, but I have enough time where I can teach you about a few concepts. So I want to give you some takeaways out of my book, The Private Money Guide. And one of the takeaways out of the book is, where is all the money for your real estate deals? Where is all the money for all these notes that you're looking to buy? Well, that answer is really simple. It's all around you. Now, you probably would think, oh, the bank's got all the money. Okay, well, they have money. Okay, but that's the most difficult place to get money. Then you might think, okay, well, the hard money lenders have some money. Well, that might be the case, but they're dried up right now because when Wall Street froze up, hard money lenders also froze up. So where is all the money? Well, let's talk about real estate for just a moment. Isn't there a ton of money in equity in people's homes right now? Would everybody agree that real estate right now is literally at one of the highest points it's ever been at? I don't care what state you live in. I'm in Buffalo, New York. Don't even try to tell me you're in a state where real estate hasn't gone up, because Buffalo never goes up, and we went up in value. Which, when property values go up, what also happens? The equity in our homes goes up. But while the equity is going up, we're slowly starting to pay some of that principal down. So right now is probably one of the best times for people to look at the equity in their houses. But you know how most people create or look at equity in their house? They get really excited. How many of you have ever gone to a party for someone that paid off their house, right? A house payoff party? I've gone to them, but I don't go for the same reason as everybody else. I just go for the beer and the chips, because I'm going to go there and I'm looking around at all these people and the people that paid their house off, and they're so excited. And then I walk up to them and I say, hey man, congratulations on selling you're paying your house off. That must feel really good. Oh, it does, man. I've been paying this thing 25 or 30 years, and finally I got that off my back. And then I look at them and I say, okay, so now that your house is paid off, and by the way, thanks for the beer and the chips, really good. What's changed in your life? And usually the answer is, well, I don't know. I don't have a mortgage payment. No. Like, are you able to take more vacations? Are you able to live a better life? Are you able to, upgrade your style of living and your lifestyle? Is there anything else that's happened outside of you don't have a mortgage payment? The answer is always no. Because you know what people do when they have equity in their house? They allow that equity to sit on their couch. Literally, their money is sitting on their couch every single day, watching their TV, drinking their soda, and eating their potato chips. So they are then off working, hustling, working really hard. And they come home after a hard day, they open the door, they look over at the couch, there their money is. And their money looks back at them and says, what? Did you have a hard day? If you don't learn how money really works and how to make your money work harder, your life will never change. And most people, that is the situation. So let's talk now. COVID-19, you need money for your deals, for your notes. Well, where is some money? Well, it's in hidden equity, folks. Your neighbors, your coworkers, your friends, your family. Some of them have houses. Some of them have houses that have equity. Yet most of them, and I do quote, most of them don't have home equity lines of credit. Most of them have not tapped into the hidden equity sitting in their house, but yet they're struggling right now. Many of them are furloughed, lost their jobs, unemployed, wondering how they're going to make their car payments, their college tuition for their kids, wondering how they're going to put food on the table, some of them, when their money is sitting on their couch being lazy. Listen up, folks. You want to raise a lot of money? Let's start here. Solve people's problems. That's all you need to do. You never, ever should ask for money again after you learn the things I'm going to start to teach you today. And the thing I'm going to teach you is not to ask for money, because the second you ask somebody for money, you are in a position of weakness. And that is not what I want for you. You need to be in a position of power. Being in a position of weakness is when you ask for something, and then you are basically at the beck and call. Once you ask, all your power is gone. And now the next play is a power play on their side. And I went through this. Here's how you should handle it. Let's say you got a coworker, a friend, a family member, okay, who's got equity in their house, and you've got a deal. Maybe you've got a really good note that's going to pay you 10, 12%. How about going to that neighbor and saying, hey, listen, I just went through this training and I learned something profound. And I really want to share this with you. Can we do a call, or can we get together in the backyard, 6 feet distance, and I'll wear my mask, where I can show you how your house can pay for your car. And maybe not just your car, maybe it'll pay for your wife's car payment too. So your house can pay for your car. Can I have some time? Who in their right mind isn't going to have a conversation with you? You are going to solve one of their biggest problems. Nobody likes a car payment. Nobody likes a car payment at all. And the video that I'm going to send all of you at the end of this will show you how to get all the money back for all the cars you will ever buy, drive, and own. Point blank, 10 minutes, that's all you need. And that video will show you how to get all the money back. But let's go back to your neighbor who's struggling to pay his car payments, who's struggling because he got laid off and he's unemployed. And he's worried that in August, when these crazy unemployment benefits cease, and all of a sudden he may not be able to go back to work because his job might just have changed everything, because this is the massive pivot. What's happening in everybody's life, if you haven't realized it yet, this is one of the largest pivots in your entire life. Everything is going to change, and many things are not going to go back to what they were before. And if his job happens to be one of those pivots, his or her job happens to be one of those pivots, that job may not come back, and he might have a real problem. And then you are the only one who can help solve that person's problem. You want money, go solve problems. But you need to understand where that money is. Well, there's a lot of money in hidden equity. The problem is a lot of people are going to wait. They're not going to tap into that hidden equity because they're like, well, I don't want another debt. I don't want to affect my credit score. You know, oh my God, if I had a home equity and I took that money, I have another payment. I can't afford another payment. That's narrow-minded thinking, because cost is only an issue in the absence of value. And folks, that's your job. Your moral responsibility is to talk to people and tell them how to make their money work for them. Your moral responsibility is to go out there and show them how to solve their problems, just like showing them how to have their house pay for their car. And if you don't do that, don't hate me for this, but shame on you. Shame on you. I talked about an obstacle or an opportunity, and what you have to understand is if you see this as an opportunity, you are going to need to rise up and be the leader that you were meant to be. You are going to need to rise up and be the light in the darkness for a lot of people. Your neighbors, your friends, your family members, the people who are struggling, your coworkers, they are the ones you need to be the light for. I just started with home equity lines of credit, okay? Because it's a simple thing and it's something that will go away. As this market takes hold, as this last little bull market run in the market, 800 points Friday, I made a ton of money doing that, trading calls, but eventually we're going to drop again. And if you don't believe me, well, let's put some money on that one because I know what I definitely know on that one. So if the market drops again, what happens in real estate? Always. Well, real estate eventually starts dropping as well. It's a lagging indicator, always has been, always will be. So when the stock market goes down, real estate will also start to go down. When people lose their jobs and they don't go back to work, does real estate start going down? Yes, because people have to sell. It's just supply and demand. So if you don't want people to lose the opportunity to have their house pay for their car, now is the only time they need to be acting, because eventually banks will decrease the value of their houses, which will decrease the amount they can access. Secondly, if you remember back to 2008 and 9 in my story in 14, banks can and probably maybe will freeze lines of credit. If you lose your job, you don't fit in the square box. You do not fit in the square box, and all you are is just a few moments away from that. Because if the box doesn't fit, the bank doesn't lend. So if you don't have the ability to get a home equity line of credit, what good is the equity in your house? Well, it's not good. So act now on that. Secondly, let's go into a couple more. How about what the biggest source of money is out there, period? Hands down, the biggest source of money that can basically be used for your deals, your notes, and everything else. Well, it's employer-sponsored retirement plans. I think last I checked, there was 44 trillion, if it was like trillion, a bad example, but that's how much money is sitting in employer-sponsored retirement plans. And what just happened in March? The markets crashed, which means employer-sponsored plans just crashed with the markets. Now, yes, it's rebounded a little, but remember, we lost, let's just say 30%. If you lose 30%, I think you need to make back like, oh gosh, what is it, 50%? There's a sliding scale, but let's just call it 50% you need to make back. Have we made 50% back? If you lost 30, you don't just have to make 30 to get back where you are, you have to make 60. If you lose 50, you got to make a lot more than 50 to get back what you lost. That's what people are realizing right now, and they're scared. They're scared, and they don't know what to do. They don't know if they should stay in the market for the long haul, because if they do, and they're a couple of years away from retirement, oh my God, I can't weather another storm. Hence, working into their 65, 75, or 85. Now let's talk about you. You have the ability to solve that problem too. Because these people that lost their jobs for their 401ks, and if they're not getting their job back, their 401k is the last thing that stayed in their office, because they packed their pictures of their family. They packed their swing line staplers. They took everything out of their office, but they left their money there because they just don't know what to do, and they're scared. Now you do, because you've got a deal. You've got a note that can pay them a return on that old employer-sponsored plan. Now, all they need to do is move that money to a self-directed IRA. Now, a speaker, I think 2 after me, is going to be talking all about that. So I'm not going to go into that, but that then puts them in control of their money, and then puts you in control of solving that person's problem. What problem can you solve? You can give them a return on their old employer-sponsored plan that they just lost money on and that they're scared on. And not only can you give them a return, because that's what people want. They want a return on their investment, but they also want security, and they want their investment returned. And since they trust you, they're going to trust you more than they trust Wall Street right now. So go out there and solve that problem. Last place. Okay. The last place where a ton of money sits, because that works for 401ks, that works for IRAs, or actually, let me go one more. The laws just changed, right? The CARES Act just made it available so that people now can take up to $100,000 from their working 401k, 403b, employer-sponsored plan. They can take up to $100,000 out. I got the CARES Act right here. My CPA sent it. They have access to $100,000 right now, folks, as a loan from their 401k. And when they take a loan from their 401k, okay, it takes their money out of the market, which effectively, if they did it right now, they fit into what Warren Buffett said: buy low, sell high, and don't lose money. Well, the market just had a massive pop up over the last month. So now they can take out at least at a higher point than they were in March. So they get out, but then they basically have this money they took in a loan. And the thing that's going through their mind is, oh my God, I have to pay this money back, and I have to pay it back at interest. And they're going to take this money every single pay period out of my paycheck. I don't want that. That's where you come, because you solve that problem. What you say is, hey, I'll show you how to make a return on that money that's sitting idle, doing nothing, that you're scared about. Not only will I show you how to make a return, but I'll make all those payments back to your 401k for you. I'll literally give you money every single month. That money will show up in your mailbox each and every month, just like this. Every month, money starts showing up in the mailbox, and that money will be more than sufficient to not only pay the loan back, and also sir or Mr. Neighbor, Mr. Family member, whoever it is, Mrs., Mr. that you're talking to, not only am I going to make those payments back, do you know that that interest that you're charged on that 401k loan, do you realize when we pay that back, that interest goes back into your account? So if your interest is 5%, now I'm paying you back with interest, but I'm going to go one better. I'm not going to just pay you back at 5%. I'm going to pay you back at whatever rate that they want, 8, 10. And by doing that, you're also giving them extra money that they what's the word I'm looking for? They need it right now. And you're going to give them that extra money and you're just solving their problem. So folks, these are just a couple places where money is. I'm going to give you the book. The book is free for you. You just pay the shipping and I'll give that link to you at the end. Secondly, or lastly, how about permanent life insurance? This is the hidden area no one goes to. How much money sits in cash value life insurance? Well, I'll tell you, it's a crap load. I don't know how to number, but it's a lot. And most people never take that money out of there because they bought these permanent life insurance plans for a death benefit, not for the living benefit and the cash value. So they just leave that cash in there. But right now they're struggling. Folks, go out, present your opportunities, show them that even though they don't think they have any money, their money is sitting there lazy, doing nothing. Remind them that their money's on their couch, eating their potato chips and drinking their soda. Create that mental picture and tell them the story. Your story is the story that will change their life. But if you don't tell them, shame on you, because you are doing a massive disservice. Can you take money out of an HSA? That's a great question. And I believe the rules also apply there, but I don't know. And what I would suggest is talking to a CPA and I can even get the answer for you on HSAs. That's the first time I've been asked that, but there's just not a ton of money sitting in HSAs, and HSAs are health savings accounts. They should be used for medical expenses, not for this. So I would probably say that wouldn't be a good source. I think there's probably some rules that changed with that, but I don't know. So again, great question. I just can't really give you a solid answer, but let's take a step off. I want to give you guys massive value. And what time do we got? All right. Yeah, I got time.
You got plenty of time, Chris. You're good.
All right. So hopefully that was helpful. Those are some sources of money. Those are some different ways where you can actually go out there and help people in a time when they need help. Help people solve their problems with their lazy money because they don't think they have any money, because they've been taught their whole life to give up control of their money. Have they not? Well, let's talk about that because that's the mysteries of money. So let's go into this. And if you guys want to participate, please just chat in the answers to this. If not, I'm just going to keep rolling in the sake of time. First off, what is the definition of money? Can anyone tell me what the actual definition of money is? I hear all sorts of answers when I speak on stages and do these to thousands of people. I get all sorts of weird answers, but what would you say the definition of money is? I'm going to give it like 2 seconds if someone wants to answer. All right, I'm just going to tell you. What the definition of money is nothing more than a means of exchange. Think about it. It doesn't matter what your money is. So nailed it, Paul. Paul nailed it. So Paul said it is nothing more than something that's traded in exchange of value. And he is absolutely right. Think about it. Food for money, money for food. Food for car, car for food. Food for car. Well, maybe we'll get to that point where we're trading food for cars, but money for car, car for money. Money for house, house for money. All we're doing is exchanging money for something that we need, right? That's all money is. It's a means of exchange. Now, second question, what company in the world uses compound interest? Now, most people, when I ask this question, they're gonna chat in or they're gonna say banks. Some people are gonna say Wall Street. They're gonna say banks and Wall Street use compound interest. Does anyone else have anything other than banks or Wall Street or financial companies that use compound interest, or at least that you think use compound interest? Text in. But here's what I'm going to tell you. Banks do not use compound interest. You see, banks charge us compound interest. Banks pay us compound interest, but they do not use compound interest, nor do insurance companies. No business in the world uses compound interest. Do you know why? Well, let me tell you why. They move money. See, movement is a natural law of the universe. Everything's in motion. My lips are flapping right now. A plane or two might be flying over. Cars are driving. The wind is blowing. The birds are flying. Everything's in motion. And smart money knows that money must be in motion as well. But to truly get compound interest, what do you have to do with your money? You have to park it. And when money is parked, it is not in motion. Banks know this. Grocery stores know this. Car dealerships know this. Go through every company that there is. They all understand that money has to be in movement. Now, it might be inventory, but inventory is money too. It all is in movement. So there isn't a company that uses compound interest. Think about your bank. You walk into your bank. I want you to take a $1 bill or a $20 bill, and I want you to name really big across it. And I want you to give it to the teller, and I want you to say, Mr. or Mrs. Teller, I would like you to take this $20 bill. You see, I put my name on it. And I'd like you to put that in that little box with my name on it in the back, right? In that big vault thingamajigger you got there. Can you go put my money in that vault? Is that how banks handle money? And then you say, I might come back next month, maybe 60 days. I don't know, but I want to come back and get that dollar. No, that teller takes that money and that money is gone. You see, there's little cubicles behind you and those people are lending that money out. They're moving that money. That's what banks do. That's what every company in the world does. A grocery store. You buy your groceries. The money goes in the register. It gets deposited. It buys more groceries. They're moving money. That's all they're doing, folks. Okay. So if they're moving money, well, let's talk about money. Are your dollars worth more today or in the future? Are they worth more today or are they worth more in the future? Well, if you're thinking that money's worth the most today, you're right. How many candy bars could you have bought 20 years ago for $1? The answer is more than today. And now the Fed just printed $2 trillion and we're going round two. We might just print another $3 trillion because why not? Those $5 trillion, let's just call the two that are out there now, those $2 trillion, how do you think they've derived value? There's no more gold, folks. Fort Knox, there was a run on Fort Knox. You know, the little leprechaun with the rainbow, they found their way and the gold is gone. So where does printed money from the Fed and the US government, where does it get its value? Well, if any of you maybe said this, from my current dollars, that's where it gets its value. See, $2 trillion just appeared out of nowhere. It doesn't exist. It doesn't have any value. It literally is just numbers moving on a screen. And when they do that, although it's good and it's needed for the economy and for that, but where does the value come from? Your dollars, which means your dollars just became weaker. And every single day, they get weaker and weaker and weaker. So your dollars are worth the most today. So if your dollars are worth the most today, why do we give up control of those dollars by putting it in 401ks, IRAs, SEPs, Simples, and bank accounts? Why would we do that just to leave it and park it there? Let's talk about that. Taxes. Do taxes go up or down? Well, of course, you're going to say up. But even if they don't go up, they just tax us on more crap. Think about Florida. No state income tax. New Yorkers flock there by the millions. And when they get there, they're super excited that they don't pay state tax, but they get in their car and they drive down the throughways and every quarter mile, they hit a toll. And they're like, well, this is funny. We hit a toll every quarter mile. Tolls are taxes, folks. They just tax you on something different. So now back to retirement accounts. I'm not bashing retirement accounts, okay? I have self-directed IRAs as well from when I worked in the financial world. I had a 401k. I'm not saying 401ks are bad. I'm simply trying to get you to think differently about what you do with your dollars. You're real estate investors or you're looking to be real estate investors. You need dollars today to take advantage of the opportunities that are coming. And if your dollars are parked somewhere that you don't have control, self-directed IRAs, not included in what I'm saying because you are in control. But regular 401ks, what are you doing? You're putting money there and you're giving up control of your best dollars. Then that money is going to grow in the market or not. And then someday later, 59.5, you're going to take that money back out and you're going to pay higher taxes on it because you're making more money. Plus, you're being paid back with weaker dollars later. Think about it. We do things with money we would just never do with things that money buys. For example, would you ever go buy a loaf of bread, beautiful, nice Italian loaf of bread, come home, put it in the freezer, close the freezer door, and wait 5, 10, or 15 years to then come back, open that freezer, take that loaf of bread out and say, yum, that's going to be good. No, it'd be freezer burner. You wouldn't eat it. Would you ever buy a car and wait 5, 10, or 15 years to drive the car? Probably not. Would you ever buy your dream house and wait 5, 10, or 15 years to live in your dream house? If you did that and you're married, you probably wouldn't be anymore. You see, we do things with money we just would never do with things that money buys. These are the mysteries of money. These are the biggest mysteries of money. And one of the other big mysteries of money is how your money flows. So let's do a little demonstration. And this should basically kind of explain some of the things the wealthy know about money that we really don't, because we're so used to just parking our dollars. So let's just say you're going to buy a car today, a $25,000 car, and then you've got your money put in the bank of wherever, Arizona, the Bank of New York, whatever bank you have it at, and your bank is agreed to pay you 4%. Now, I know your bank's probably not paying you 4%. So let's just assume you found yourself a really good bank that does pay you 4%. And because you found a really good bank, me, Chris Naugle, is going to be your banker today. So you're going to buy a car. Now, there's 3 ways you can buy a car. Number 1, you can lease it, which in turn you exchange dollars for the right to drive the car. And a couple of years later, you give the car back and you get none of the money back. Great idea. You're renting. Okay. Second option, you take a loan from a bank or a finance company. Again, you exchange monthly payments for the right to drive the car, and you own the car in 3 or 5 years when you pay the car off, but the car has dropped in value. Or the last way, pay cash for it. If you pay cash for it, you own the car, it's going to depreciate in value, and you gave up the right to earn more money on your dollars. All of them sound like pretty bad ideas, but it's just what we know about money. So you come into the bank, you want this car, and you say, all right, Chris, I got to take that 25 grand out of that really good bank because I don't want car payments and I want to buy this car. And me as your banker, I say, whoa, hold on a second. I got a better idea. How about our really good bank makes you a loan for $25,000, and our bank will charge you 6% simple interest, and we'll do it for whatever term you want. How about 60 months? But then our bank will agree to continue to pay you 4% on that $25,000, and I will promise you that we will pay you more money on that $25,000 earning 4% than you will ever pay the bank on that 6% car loan over the same time frame. Now, let me ask you, is that even possible? Most of you are looking at the numbers saying, no, Chris, you idiot. 6 minus 4 is -2. You're losing 2%. That's what most people tell me when I speak. However, let's just do the math, because I think the banker is correct. Well, I am the banker and I am correct. Here's the math. $483.32 is your monthly payment. Now, that monthly payment means over 60 months, you will have paid $28,999 for that car. $25,000 for the car, the rest is interest. Okay, fair enough. Now, the $25,000 earning 4% over the exact same time frame, how much did that grow to? Well, right there. So right there, you're paying 2% in interest. But the future value of that $25,000 earning 4% is $30,525. Is that more, or do we just do math different here in Buffalo, New York? 30,000 is more than 28. Matter of fact, it's $1,526 more. But a lot of people were thinking it's not possible to make more money when you're earning 4 and you're paying 6. But however, you missed the most important thing. You missed the simple fact that the 25,000 is going up. It's compounding on itself. Every year, it's making more on more money. The $25,000 loan is simple interest, which means it never gets higher, but then you pay it down, so that balance is going down. So basically, one's going down, one is going up. That is all there is to it. So the thing I'm going to show you today, and I'm going to do this completely different than I've ever really done it. I've done this presentation one time this way because I think it's easier if I just tell you how I'm doing it. Fair enough. I'm going to show you how I use something that you all know about, something that the Rockefellers created back hundreds of years ago when they didn't like banks. They didn't trust banks. They didn't want their money at banks, so they had to create a new banking system, and that's what they did. But the banking system they created wasn't with banks, folks. This is what I'm going to teach you, and what the video I'm going to give you is going to teach you, and what the free book, Mapping Out the Millionaire Mystery, is going to teach you. I just want to sprinkle this secret on you so you understand what it is, and then you can do your research, read the book, watch the video, and then determine whether this is something that will or will not work for you. Either way, my job is to educate you and show you how to do this. What I'm going to show you is what's called the Money Multiplier. Now, this also is a massive source of money. And how I learned about this is my lender, that Mike guy who was lending me money that I met at that 3-day event. I was in Cheesecake Factory and he told me about this thing. And I looked at Mike and I said, Mike, I know what you're talking about, and what you're talking about doesn't work that way. And he looked me dead in the eye and he says, okay, that's pretty funny, because all these loans I've been making you, guess where it's coming from? It's coming from the Money Multiplier method, this concept I'm going to show you. And I said, it can't work that way. Everything I've been taught about this as an advisor tells me it doesn't work that way. What have I been missing? Well, I've been missing the machine. All the machine is, this money multiplier method is three things, okay? It's the machine, which is all we're going to do is this machine. It's the most efficient machine that we have found. Actually, the Rockefellers figured it out, that will move your money. So we're going to talk about the machine next, and it's going to blow your guys' mind. So don't any of you drop. I'm watching those numbers. I got 56 of you on here now. I want to see how many of you leave in a moment. Okay. Secondly, building wealth is a marathon. It doesn't have an easy button like Staples. You don't just hit an easy button and all of a sudden you're wealthy. It takes work and it takes time. This concept I'm going to show you is no different. It's a concept that will take time. How much? I'm going to show you how much. And lastly, the goal. You always have to have dreams. You have to have goals. And the goal, I don't know, let's say it's a millionaire to be a billionaire, whatever your goal is, you have to have dreams and follow them. So this machine that I'm talking about, here is what it is. Remember the bike. Please take your mindset. I told you already that things are going to look too good to be true, and this is thinking different. The machine that I'm talking about, that Mike was using, that the wealthiest human beings I've come across in my journeys, billionaires, multimillionaires, banks, and Fortune 100 and 500 companies all use this in a very different way than you know, but that machine is this. It is nothing more than a dividend-paying, specially designed whole life policy from a mutually owned company. Now, at this point, we got 56. I know what you're thinking. Chris, what the heck does a whole life insurance policy have to do with me building my wealth? Well, that's a great question. And you know, the answer is everything. It has everything to do with you building your wealth, because this is what the wealthy do. And if you want to build wealth, why not just mimic the wealthy? Or you can take the path that I did and ride the roller coaster and just do the conventional financial knowledge. So let's really see what we're talking about, because right off the bat, you think you know what a whole life policy is, and you do. You think of it as a death benefit someday when you die. And if you listen to Dave Ramsey or Susie Orman, you think of it as a really expensive life insurance policy that is a terrible investment. Absolutely correct. Dave Ramsey got something right. Whole life insurance is a terrible investment. But whole life insurance, used in its traditional way and the way that I'm going to show you, is not an investment at all. It is guaranteed, and investments involve risk. So he just doesn't know what he doesn't know. You see, the way that I'm going to show you how these work is the same way that the banks have used this for hundreds of years. That's awesome. We just added a person. That's a first. It's called BOLI, bank-owned life insurance. See, what you don't know, and you should Google BOLI. Banks are the #1 purchasers of whole life insurance, but this is not your standard off-the-shelf whole life. This is absolutely not a whole life the way that you know it. This is a specially designed whole life built completely backwards than the life insurance you're used to buying. It is not the same thing. It's just a machine to move money. So look up BOLI and you'll find that banks are the #1 purchasers. Since 2013, banks have quadrupled the amount they're buying. And then you can probably answer your own question as to, well, how is that? Go into a bank. How many vice presidents do you see? Not life settlements, Paul. Great analogy, but that's not what this is. How many vice presidents do you see in a bank? A ton. There's a vice president of everything in a bank. And vice presidents are there because they are an executive of the bank, and it gives the bank an insurable interest in that employee. So the bank goes out and buys a specially designed whole life, the way I'm going to show you. They then promise, or they give that employee a fully paid up life insurance policy and a deferred compensation and an executive benefits plan. Well, what do you think funds that entire thing? This specially designed whole life, because all the bank's going to do is put a bunch of money into these specially designed contracts, and they're just going to move that money back out. And I'm going to show you how that works in just a moment. They're just going to move that. Then when that employee retires, they're going to pay that employee a deferred compensation out of the proceeds, the cash value. Then when that employee dies, his family's going to get a fully paid up life insurance plan. But who else is going to get paid upon the death of that vice president? If you said the bank, you're absolutely correct. If you said Apple, you're absolutely correct. If you said Genworth, you're absolutely correct. They're made whole on every penny. Well, this is why the Rockefellers, the Rothschilds, and every wealthy family can never, ever go broke. They only get richer, because when one passes, the death benefit pays out to the trust, and that is how they continue doing that. But what you don't know is what I'm going to show you, and that is this: how to make more money earning 4 when you're paying 6. All I was doing is showing you this really good bank. What is that really good bank? It's a whole life policy built a specific way with a specific mutually owned company. They guarantee you 4%. Plus, they pay you a dividend every single year. So the company I'm going to show you is right now paying 6.2% total, 4% guaranteed, 2.2 dividend. And if you take money from your cash value, you're not actually taking your money. So your money sits in your account earning uninterrupted compound interest, which is what Albert Einstein said was the eighth wonder of the world. The most powerful financial thing or tool in the financial world is uninterrupted compound interest. But you don't know how to earn that. You think you do, but you don't, because to get uninterrupted compound interest, that means you've got a place to put your money that will pay you a guaranteed 4%. But then that place where you're putting it is not going to get charged taxes, because those would interrupt the compounding. Secondly, you're not going to get charged fees, okay, because that would interrupt that flow. And lastly, you'd have to have access to your money. So if you took that money out, well, to get uninterrupted compound interest, your money would have to continue earning interest. Well, this vehicle is one of the only vehicles I've ever found. And if you've got one that works the same way or is better, I will change all my presentations and do it. But for hundreds of years, there has not been a better vehicle that allows you to put money into these contracts, then take your money right back out, use your money, but never stop earning interest on that money. So let's dive in. First, I'm going to go real quick with this because I definitely got a lot to cover in the time I have left with you. I've got 15 minutes left with you. So I need you to understand how a bank works. You deposit money at a bank, and the bank then pays you interest. Let's assume it's 4%. But we already talked about what the bank does. They move your money. They loan it out to your neighbor for a house. So your house gets a mortgage at 7%. Don't worry about the numbers. These are just for example. And then your neighbor exchanges the funds from the mortgage to the seller. The seller gives them the keys, and everybody's happy. The bank gets the money back from the seller. Bank needs to move that money, so they lend it out on a car at 8%. Exchange is right there. Car dealership gives the car for the money from the loan. Then, you're so happy, you're doing well. You go and your wife wants a new kitchen and you want a man cave. Men want a man cave. So you get a home remodel loan. You take a loan from the bank, 9%. Contractors deposit the money back in. That's the exchange and the flow. Then debt consolidation. You want to pay off your credit cards. Boom, you do that. In this transactions right here that a bank does, and they do lots more, who's in control of every one of these? The bank is. Are you in control of your money? No, you're just earning 4%. Your money's parked being lazy, okay, at the bank earning 4%. And then how much risk did the bank take? Not much. Every one of these are secured by an asset, just like all of you. You're real estate investors, right? So when you borrow money, you have security, just like that house, that you can give to somebody as security for that loan. Well, banks do the same thing. But let's see how much money the bank made. 4 minus 7 is 3. 4 minus 8 is 4. 4 minus 9 is 5. And 4 minus 12 is 8. So how much did the bank make on your money and my money and everybody else's? 20%. The bank made 20% on everybody else's money. How many of you would be okay making 20% on everybody else's money? Well, the good news is you can. You just need to mimic what the bank does. But you just need to change one thing. And that one thing you need to change is where your money goes first. But it's really not 20%, because 4 and 20 isn't 25 times more than 4. So in turn, did the bank actually make 500% more than you did? Yes, sir. And ma'am and folks, the bank made 500% more than you. Not only that, I could prove to you that banks make 400 to 1,300% on the money you leave there. Go to Bauer Financial and you will see any bank for any time. That's how much they make on the money we leave there. Don't be mad, just mimic. So let me now, normally I would show you the next segment would be how to get all the money back for all the cars you're ever going to buy, drive, and own. But what I'm going to do now is I'm going to show you my newest banking policy. Using this concept, which I have since 2014, I have only been using this. I don't really use conventional banks outside of banking or online banking and everything else. My money goes into the bank accounts, and I try to get it out as quick as I can because I don't want money at banks. I don't feel comfortable with money in banks. And now with this happening, I know that if I go to the bank to take out more than 10 grand, I can't. They will not give me all of my money in one shot. And I don't feel good about that. So all of my money is sitting in mutually owned insurance companies using it the way I'm going to show you here. This is my newest plan. And this is 10 grand. So I changed the numbers just so you can see a $10,000 number. But this is my newest plan, exactly how it's built. Full transparency, this is Mass Mutual. I earned 4% guarantee plus a 2.2% dividend as of 2020. Dividends are not guaranteed. So I want you to look at this very carefully, and I want you to really just look at the green and the yellow columns, because what you know of a whole life is that it's a terrible investment. And if you put money in a whole life, you don't have access to your money. Now, the way I design them and the way that the Rockefellers do it and banks do it, if I put 10 grand in, how much money do I have immediately to take out of this contract? When I say immediately, I mean when my check clears. We always say immediately in the first 30 days. That's how liquid these are. But you don't know that whole life can work this way. So I put 10 grand in. I immediately could take out 92.14. Some of you are probably thinking, yeah, but you're only 42 and I'm 60. Folks, the numbers would be exactly the same. The only difference for a 60 or 70-year-old would be your death benefit would be less. Your death benefit wouldn't be 435,000, it would be lower. But mine, because I'm 44, I have access to 92% of my money immediately when I make that deposit. But then what am I going to do with that money? Well, I'm not going to leave it there because I want my money moving. I'm going to take that $9,200 out, and I'm going to take that money out, and I'm going to go buy myself a real estate deal. I'm going to show you this in a moment. I'm going to go buy myself a real estate deal. I'm going to take it to my local community bank. They're going to give me 80%. I'm going to then take out whatever I can from my banking policy, and I'm going to use that money to fund the gap in what the bank won't give me. And then I'm going to charge my LLC 6%. Why would I charge my LLC 6%? Well, because I'm okay paying the bank interest. I should be okay paying myself interest on my money. I'm the bank, folks. And to be the bank, you have to follow the rules. First, pay yourself first. Second, pay yourself back with interest. You're okay paying the credit card's interest. You're okay paying the bank's interest. Well, when you lend money to your company, you darn well should pay yourself back with interest. 6%. Why? Because that's what I would pay the bank in a line of credit. So I loan that money. I move that money out. But the beauty is if I put in 10 grand and I take out $9,000, how much money am I making interest on? Can anyone guess from what I said earlier? Any of you that said 10 grand, you're absolutely correct. I am making 4% plus dividend on the full $10,000, even though I took 9,000 out. Why? Because it's not my money leaving the account. It's the insurance company giving me a loan for the $9,000, allowing my money to continue earning 6.2. But the insurance company does charge me interest on that loan, because I know you guys someone's asking that. And that interest that they charge is 5%. So if the insurance company is charging me 5% and I'm making 6.2, what am I actually making? 1.2. Okay. I'm making 1.2% for using my own money. Holy crap. Ding, ding, ding. Uninterrupted compound interest. But let's just go forward. Okay. Down here, let's look at year 5. Now, what I want to do is in the sake of time, I'm going to keep going with this, and I'm going to come back and show you the returns that you're going to make on this money. Because all of you are probably looking at it the same way you were taught to look at money. And you're saying, okay, I put 50 grand in over 5 years and I only made 1,126, which would be about a 2.3% return on your money. And a lot of you are like, that's a terrible return. If I show this to an advisor, like, oh my God, I could crush that in the market. Absolutely. But how about this concept? Remember I said that when you put money in, you're going to take it right back out. So let's say I put 10 grand in and I took 9,000 out and I went out and I bought USO, United States Oil, which is at a 30-year low right now. And USO climbed and climbed and climbed and made money. I'm making money twice. What if I took 9 grand out and I went and bought a cash producing piece of real estate or a cash producing note? Okay. 9 grand might not do it, but what about 50? Every year that I put money in, I put 10 grand in the next year and I take that money out. And each year that money goes up. Well, how much does it go up? We'll go to year 3, folks. Year 3, let's just do math. And I promise I'm getting close on time and I got to move. But year 3, we put in 10 grand and we've got 29,433. But year 2, we had 19,000. So if I do 29,433 minus 19,090, I made 10,343. But then I put 10 grand in, so I got to take that 10 grand out. I made $343 on that 10,000, but am I going to just leave it there? Because that still doesn't get you excited. No, I'm going to take 10,343 out and put it into something that's making me money. Then I'm going to recapture that money and put that money back in my plan and recycle and repeat that process over and over. If this is over your head, I promise you I have a video that will make this all make sense. I'm going quick. But now I just had a daughter, didn't I? So I'm going to be using this money each and every single year that I put money in. I'm using it for real estate. I'm lending it out to people like you for notes, for real estate deals, and I'm charging you 12%. Okay. So I'm charging 12, but I'm still making 6.2, or the split of what it is, which we're going to get to in a moment. Now, when Vivi turns 18, Vivi's my new daughter, 3 weeks old. My new daughter needs to go to school. Well, when she goes to college, she's going to need money. I got $185,437 to get her kicked off for school. But let's say she decides not to go to school. Let's say she's like, Dad, I want to be a professional snowboarder or a professional surfer. Well, that's going to cost money too. And if I was saving money in traditional vehicles, then I can't just take that money out to fund her surfing excursions. But here, I sure can. If Vivi decides she wants to join the family business and start building some rental portfolios of herself, she's got 185 grand to get kicked off. But you know what? Dad has to look at everything from a return on investment. So let's look at our cash on cash return. I talked about cumulative return, which is if you just park the money like you're used to. But if you park the money and just left it and never used it, you would have made 2.3 by year 5. But you're not going to do that. You're smarter than that. You're going to move your money. And by moving your money, all you need to look at is cash on cash return. Every year when you deposit 10 grand, how much money did that 10 grand make that year? Isn't that more logical? Because if I can take the money and use it and still make interest on it, then really all I'm concerned about is how much did I make that year on that year's deposit? That's the right way to do it. So it's 10.7. I rounded up to 11. I deposit 10 grand in year 5. And if I did that math like I showed you, or if you do it right here on the screen, you subtract year 5's cash value, okay, total cash value, right here, I'll put my cursor over it. If I subtract year 5 from year 4, what I would do is I would find that my net return on that 10 grand, which we already know is $1,071 down here, and I divide that into my deposit of 10 grand, that's a 10.71% return. How about year 11? If I went down to year 11 and I subtracted year 11's cash from year 10's cash, and then I subtracted out the 4 grand I deposited that year, well, folks, I made $3,842 on the $4,000 I deposited, and I made a 96% cash on cash return. Okay, so that's awesome. This is why this is used by the wealthy, why the banks use this. You're starting to see the power of uninterrupted compound interest. Let's say I retire. I get to age 64. Vivi's off doing her surfing career. I bought a ton of real estate using this vehicle, but now I want to retire and I just want to start taking money. Well, here's my cash on cash returns every year into retirement. 64, 65, 66, 67. Folks, these numbers, they are right there, black and white. This doesn't involve the markets. This doesn't involve risk. That's the numbers. This is uninterrupted compound interest. Let's go on, okay? Some of you are still stuck in cumulative return because your mind still hasn't switched to ride the backward bicycle. Great. So that's me at 65. Hope to God I look better than that, but I put in $228,000. My cash value is $680,000. What is the return on the total amount I put in versus the total cash I have available to use? 298%. How many of you would argue making a 298% return? None of you. None of you would, and that does not assume you ever used 1 penny of that money, nor does the other returns I gave you. It never assumes you took a penny out. It assumes that you parked the money in this specially designed whole life, built with a mutually owned company that we create, and you just left that money, which is not what you're going to do. Then here you go. Here's the returns. I'm going quick because I'm almost out of time, folks. There's the returns at age 75. 423,979. That's the cash value minus the year before, 74. That would be 402,999, or I'm sorry, 099, $21,000 minus the $4,000 deposit that I made that year into my banking policy. It's 17,000. So I literally deposited 4 and I made 17. I deposited 4,000 and I made 17 cash on cash. That's a 447% return. Folks, I could just keep going. I could do the numbers with $100,000. If you're a real estate investor and you had 100 grand, the numbers are the same. Year 3, cash on cash, 4%. Year 5, 11. Year 11, 105. How many times do you want your money making these kind of returns? And the best part is you're using the money, folks. You're not parking it like you've been taught your whole life. You're taking the money out and you're moving it the same way the bank does. And here's how you move it. Real quick, where am I at? I got 2 minutes left, folks, and I got to give you these free books.
If we need to go, we got a 15-minute break in between, Chris. So if you need a few extra minutes, we're good with that.
Oh, dude, thank you. I'm like talking so fast and people are like, slow down, you New Yorker. I'm very good at staying on track, folks, and I'm going to give it to you. Here's how I move the money.
You get a 15-minute emergency thing. Awesome. We're good.
All right, folks, you guys stick with me here because now I can slow it down. Here's me. You just saw my exact plan that I am starting, okay? That's my 7th banking policy. I have 6 other ones already in motion working, most of which is in real estate or lent out to other real estate investors. This is my 7th one. Why so many? Well, every one of these plans I set up, that $10,000 plan I just showed you, That's the most I can ever deposit. I build these right under the IRS guidelines, which is called the max 7-pay rule. So that means if I start a plan at 10, I can never put more than 10 in. You actually saw in year 11, I had to put only 4 in. It's because there's rules with the IRS. So when I max out that $10,000 plan and I want to put in another 20 the next year, I can't. I have to start another plan. So I have 7 of these things now. Here's how I move my money. Okay, and this is how I've been doing this since 2014, and this is how Mike did it and showed me in that Cheesecake Factory. Here we go. Whoops. Got to get my cursor back. Here we are. This is me. Okay, I basically deposit money in this silly, specially designed whole life, that thing that everybody tells you is the worst investment you can put money in. I put it in there, and what am I going to do? I'm going to go buy a piece of real estate. There it is. I buy a $100,000 piece of real estate and I take it to my local community bank, not commercial bank, community bank. The bank agrees to give me 80% of purchase price. And I didn't get into banks, but they could give you more than that, but we'll just do 80. That means they give me $80,000. I'm short 20. Well, lo and behold, where's my 20 grand? It's right up there in my specially designed whole life. I take that money out. I put it into a segregated bank account. Now, why a segregated bank account? Well, because I like to keep all my banking separate. I call it an operating account, but here I'm just showing you it's just a bank account used simply for this banking concept. Then what I do is I make a note between me personally and my LLC, which is LC Strategic Realty. I basically say, Chris Naugle is going to lend LC Strategic Realty $20,000 at a rate of 6%. And I pick the terms. I'm the bank. I can tell my company the terms are whatever the hell I want them to be. Then my entity closes on this real estate deal using the bank's money and my money. Again, this works for notes too, folks. So just change the property for a note. Okay. Then you basically have the note or this is my note. Hell, I bet you guys are smarter than me. You could probably find a way to sell these notes. I don't know how to do that, but you probably know how. Ding, ding, ding. Maybe that's a whole new thing. My company or my property starts paying rent roll. They rent it out and they start getting rent deposited in their account. Every month, I set up a bill pay from my corporate LLC company bank account right back to my banking policy for whatever the terms are here. What I just did is I basically allowed my entity to receive a write-off of 6%, whatever the interest is on those payments. Legal, check with your CPA. I already did, but I'm not a CPA, so check with yours. And then I basically pay myself back with interest into this banking policy. Now, isn't that a way better way to do this than paying the bank interest or the credit card's interest? Folks, if you understand what just happened here, what I want you to think about is replace this house for a car. And basically, I'll show you how to get all the money back for all the cars you will ever buy, drive, and own. Replace this house for debt. What if you just did this with debt? You basically took loans from your policy, you paid off your Visa, whatever you were given Visa, you recycle and recapture back into your banking policy. So if you're paying Visa 15%, that's fine. You pay yourself back that 15%. The dollars don't change. You haven't worked any harder, lost control of your money, or taken on any additional risk. You just changed one thing. You changed who gets the money. So either Visa is going to get it or you are. Either the Bank of Arizona is going to get it or you are. It's simply changing your mindset and changing that one thing. That's all I showed you how to do. And then I had a couple questions here that I want to hit. How old? What is the age limit? There isn't one. All I will tell you is the guidelines for how much you need to put into these. If you're under 30, take your age, 30 years old times 15, and that will give you your minimum monthly deposit. Okay. If you're over 60, take your age, 60 times 15. Okay, times 15, that gives you your minimum monthly. If you're anywhere in the middle of that, 30 to 60, age times 10 gives you your minimum deposit you need to make. There is no restrictions. There is health restrictions. You need to get qualified. Not everybody will qualify, which means if you don't qualify medically for one of these specially designed plans, no big deal. Do what the bank does. Find somebody to borrow a life on. How about a spouse, a child, a partner in your business, an executive in your company like the banks? Use them for the insured and you're the owner. With ownership comes control. That's all you want. You want to control your money. That's it. And then if you have money just sitting around in a bank account and you want to deposit that money or you just want to do a dump in, you can do that as well. Listen, there's a lot of questions that are going to come up. Folks, I'm going to give you a video right now. I'm going to put it in here. Okay. I'm going to chat it in. If you guys want to see the video teaching you all this stuff slower so you can stop it, repeat it, I'm going to put that link up right now. Okay. And Also, anybody that wants this recording of this video I just did, I will be happy to send that to you. This is what our company does. We help people set these concepts, these plans up. It's the only thing we do. So here's the video. And then I did promise you guys some books, which is where we're going next. So, okay, there's the video right there. All right, it is moneyschoolrei.com/masterclass-replay. It will give you the video. And then if you want this video that I just did, just email chris@themoneymultiplier.com. And I will send you the recording of what I just did showing how I'm using mine. Now let's get some books. Actually, some questions. No age limit, so I answered that one. Any typical internal rate of return you see with this? What is the typical internal rate of return? Internal rate of return, if you did it, I think is around 3.5 if you do it that way. But again, the internal rate of return does not assume you're using the money. You're making all the money on the banking concept. The whole life, don't get hung up on the whole life. That just moves your money. Whatever return you make there, that's the nominal part. You're making your money on the real estate and taking back the money you're giving to the credit cards in the notes. That's where you're making your money. The machine, the specially designed whole life, that's going to give you a great return, which I showed you what they were. It's more than great. But all that thing's there to do is move your money. Don't get hung up on that. It's just the machine that moves your money. Yes, you can put one in your child's name, Leslie. I'm doing that with my daughter. And then, all right, because of the sake of time, here it is. You guys want these books, this book, the one I read, Mapping Out the Millionaire Mystery, every concept I just talked about. Here's the book link. It is Money School, same as before, and this book is free. You just got to pay the shipping, and if you're international, there's an international shipping charge. I got screwed shipping a book to Singapore. It was $119, or I'm sorry, it was like over $100. I don't remember how much, but I paid it because I wanted them to have my book, but I'm not doing that anymore. So if you want Mapping Out the Millionaire Mystery, all you're going to do is you're just going to and you're going to go to that link right there, moneyschoolrei.com/new book. I don't know why I put the .com in there twice. Don't use the second .com. It's because I'm rushing. .com/new book. Put that in. You will get the book for free. It's $9.95 for shipping. All right. How about the other book? It's the exact same link. You'll notice all the links are the same, so it's easy to remember. moneyschoolrei.com/book. That's an easy one. So that'll give you the private money guide. There are 2 books right there for free. You can have them, just pay the shipping. And I gave you the link for the video, which will give you the ability to book a time with me to discuss this concept. And any of you that really are just like, man, I got to ask, I need to ask you questions that I don't want to ask live. Great. Here's what you do. You see that phone number or that number. Go into your text and text 33777 and then just put Money Multiplier, no space, Money Multiplier in the subject line, send it off, and that will give you access to our calendar. With that being said, folks, I hope you guys enjoyed this. I know it was quick because I tried giving you massive value. Normally, I would have only done one or the other, but he gave me an extra 15 minutes, so I tried doing my best. I hope you guys enjoy.
Great stuff as always, Chris, man.
Thanks, man. I love that question from the one. I get it every single time about the IULs. IULs do not work for what I just said. I'd be happy to tell you exactly why. IULs work great for retirement, but not for this concept. The whole life is the only vehicle, has always been, that will work this way, and it is not your standard off the shelf. So if you have a whole life, it's not going to do what you just saw, but close enough.
Yeah, I see that before, but yeah, this is a great tool for you guys. Says thank you so much, Chris. Very interesting.
My pleasure.
Guys, take advantage of the opportunity to get the book. Well worth it. Chris puts out great stuff. Definitely a fan. That's why we brought him on. You were actually, I think, the second phone call I made, besides my sponsor for the podcast, to have you speaking on here. I reached out to you and said, hey, Chris, I want to get you on here because I've been wanting to do this since we had you on the podcast.
I am honored, man. I am honored. And I watch all your stuff. I so love what you're doing. You're out there sharing the knowledge, teaching people how to do the notes and everything you do, man. Kudos. My hats is off to you because you're really helping change people's lives.
Thanks, man. I appreciate you too, man. And that's what we need. We need people that are going to help change things for the positive, focus on solutions, not focus on the problems. Focus on how to solve things, and that's why I want to get you on here, man. So kudos to you, man. Thanks so much for being on Note Camp 2020. Let's touch base. I look forward to sharing a drink with you sometime soon once we can get out of this whole
Heck yeah, man.
lockdown,
I need to get out of New York. This state is garbage and I'm like a prisoner. I'll be down as soon as I'm able to get on a plane.
You know, I may have to do this. You know, a funny story here is the governor or the mayor of Houston, one of the two, I don't know if it was governor or mayor, but said basically, okay, we've gone to phase 2 here. You can have in-person meetings up to 12, or you can have protests up to 100 people. So I think I'm going to start my own protest and invite my 99 of my best friends.
Oh my gosh. I think here in New York, it would go something like this. You're not allowed to be around anybody, including your own family or your dog. But if you want to protest, you can join thousands. Help yourself.
No, we're not minimizing what's going on out there, the protests that all.
Oh, no, not at all.
We're just, it's just a weird aspect of things out here. So
I'm
guys,
not even, the protest, good. You know, like, hey, like
Yep.
whatever. I'm not going to even go there, but I'm talking about New York's rules with this confinement and unconstitutional behavior that they're partaking in.
Yeah. It's definitely an interesting time than it was 90 days ago. So guys, make sure you text that number. And now, is there a space between Money Multiplier, or is it just all one word?
All one word. Yep. So you're just going to go 33777. You're going to put that in the phone, 33777. Then you're going to type Money Multiplier, all one word. Don't space it. And then hit enter. It will then ask you for your name. Okay. Put your name in. Then it will ask for your email, because it's going to email you my calendar. And then you basically just pick a time. So we're not going to solicit you. It's just, that's how we have to do it. We got to send you the calendar invite once you book a time.
Yeah. Perfect. Love it. I do the same thing as well too. Well, Chris, enjoy the rest of your day, the rest of your weekend. And I'll give you a phone call first part of this next week. Let's catch up. All right,
man.
brother?
Thank you so much. I really appreciate the opportunity. And thank you all. Have a good weekend.
Thanks, Chris.